Well, hey there, I'm Chantel Ray, and over the last decade, I have grown and scaled a company into 20 states, and then I merged it in with a $2 billion company that's now in 50 states and 24 countries. And we started out as just a single real estate team. We sold 1,500 homes in Virginia Beach in that Hampton Roads area, and then we ended up expanding into 20 states. But here's the truth: success alone doesn't bring fulfillment. And winning on the outside while losing on the inside taught me the importance of faith and health and family and wealth. And, we're all taught that you're supposed to start out as an agent and then you build a team and then you open up your own small brokerage. And it's everyone's quote dream that you open up your own brokerage. And I think that's one of the biggest mistakes that I made, because I can't even tell you what a living nightmare it was and how it took a toll on my health physically. Well, actually, I got psoriatic arthritis. And, right now, after COVID, they say that only 3% of the population is employable, and I've seen some studies that say less than 1% of the population is employable right now. No one wants to work. Everyone wants to get paid extreme amounts of money for, chilling out. There's so many lessons I learned. Like, it was ridiculous how much I learned. And now I love to help other entrepreneurs, teach them how to scale their business in like 10x in 3 years or less without trading time for money. So the uncomfortable truth is that entrepreneurs really face today is that you won't get to your next level if you're still doing the same old strategies that you were doing before. And so when I look at my business, our most profitable year was not when we expanded into 20 states, like when we were dominating our market locally. And then I realized that revenue alone is vanity, but profit is sanity.
We were so profitable when we were a Chantel Ray team. We were just really crushing it. And then when I decided to copy everything EXP did, we had 6 full-time web developers on staff. We grew to 20 states. So think about the number of brokers that we had, and payroll was outrageous. So our revenue was through the roof, but our profit was really low. And so what I always say is revenue is for vanity, profit is for sanity. And so
So that's what I love to teach people as well. And the other lesson that I love to talk about is marketing over everything, right? Like we always say, welcome to Moe's, MOE. My best skill is marketing. When you go to Moe's, welcome to Moe's, it's MOE, marketing over everything. And that's what I know how to do best. I can teach everyone here what to do to get more leads, get people in their downline. And that's what allowed us to generate massive profits, selling thousands of homes in that single area. And then what happened was, as we started reaching out and branching out, we learned some hard lessons because we weren't spending the money on marketing that we needed to. So scaling your business is not about working harder. It's about following a clear, actionable system. First thing I want to talk to you about is just what are some of the things that I started doing to start working smarter, not harder, and just hit the easy button, and how you can maximize your money in different ways that are going to maximize your return every year. So let's just talk about some different ways that I make money and different ways in passive income. I have a whole bunch of rental properties that make money, but to be honest, I'm really only making between 5 and 7% on a return on that. And the reason is because insurance has gotten so outrageous, taxes has gotten so outrageous. One of my properties, I just had to put a brand new roof on it and nothing was really wrong with it. Like, our insurance company said, hey, we're doing random inspections right now, and there's a tree that's kind of leaning on your roof. If you want us to continue with your insurance, you need a brand new roof. Even though there was really nothing wrong with that roof, it was kind of fine. And they were like, nope, time for a brand new roof. They required me to get it if I wanted to continue insuring with them. So I ended up doing it. I even have a property manager for all my properties. So I do very little with them. I have a book called Delegate Everything But Sex. And so, of course, if people are like, why do you delegate out your rental properties? You know how to do that like the back of your hand. And it's like, yes, I do. But if you haven't gotten a copy of the book, you want to read it because I literally dive deep into everything I do to delegate things off your plate. And if you haven't gotten the book yet, go to Amazon. When you buy it on Amazon, if you email us at admin@canzel.com, you'll actually get an audio copy of the book for free. So with my rental properties, like I said, if you look at how much money I'm making, some of them I'm making between 5 and 7% a year. It's just not a great return. I can literally put my money into a savings account that I have with a different account, and I could actually make between 4 and 5% on my money and do nothing with it. So now I want to talk to you about how I make money with EXP, the company that I sold to. So even if you are not a real estate agent and you are thinking about ever getting into real estate, you need to learn how this model works. And there's so many people, like friends of mine, that you can literally get your real estate license in less than 3 weeks. You never have to do a transaction and you can still make this kind of money. So let's go through this model. I want to explain EXP Realty's revenue share explain correctly, because let me tell you, there's tons of changes. This is the 2024, 2025 version. So I want for you to be able to understand. Most people outside of EXP don't properly understand the entirety of this. And most people at the company don't even understand it. So I'm going to give you the proper explanation and also where people get it wrong. All right, so I'm going to overlay the screen so you can see the actual revenue share and how it works. I can also email this to you as well. Also, we'd love to have you have a private one-on-one call with me so you can understand how important it is to choose the right sponsor, because each sponsor offers different things. Some people don't offer anything, and some people offer massive value. So make sure you comment below and get exactly all the questions answered. As you can see, we have a 7-tier compensation plan. And this was actually modeled after Keller Williams, but there's a huge difference. We do revenue share, which revenue share is before expenses. They do profit share, which means it's after expenses. So right now they might have a ton of space that they're paying for, tons of salaries. They're only sharing a tiered system after they pay expenses, which is a major difference. We have a 7-tier structure, and you have expansion share, exponential share, and then you have what's called FLQA, or frontline qualifying agents. Now, it seems confusing, but you really need to understand this. Let me explain something on the first 3 tiers. There's expansion share and there's exponential share. So if you look at the first 3 levels, just to make it not confusing, I'm going to cross these off right here because the first 3 levels open up right away. You don't have to worry about expansion share versus exponential. So on the first level, no matter what, you make 17.5%. Now, if you look at this chart, you add the 1% plus the 19%, that gives you 20%. And then you add the 0.5 plus the 12, that gives you 12.5%. Again, the first 3 levels open up right away. When you add the expansion share and the exponential share, that gives you the total of what's in this 3rd column. You get 17.5, 20% on the 2nd level, and 12.5%. But here's the kicker. In your first year, you make 50% of revenue share pool in their first year with you. So let's do an example of a transaction that has $10,000. Let's pretend the agent's on an 80-20 split. The agent will get $8,000, EXP will get $2,000. Out of that $2,000, they split half the money to run the company. The other half they use for something called rev share pool. So in this example of a $10,000 commission, $1,000 goes to the rev share pool. So if this person's on your level 1, you would make $175. So if they did the full $16,000 cap, for the whole year. That means the amount EXP is going to share in the rev pool is $8,000. So if I take $8,000 and I multiply it by 17 and a half, that gives me $1,400. So that's the most that you're getting on level one. But here's the kicker. For your first year, instead of 1,400 and getting the 17.5%, that first year you make 50% of the rev share pool. So the rev share pool is 8,000. So in the first year you make $4,000. So in that transaction where I said the person does a $10,000 transaction, instead of getting $175, you're going to get $500 in their first year with you. Does that make sense? So if you follow it down the line, you'll see how much they get in tier 2, tier 3, tier 4. So if you're a capper, levels 4 and 5 open up right away. And if you're an icon agent, levels 6 and 7 open up right away. So remember, the other way that you can open up level 4, 5, 6, and 7 is by having enough FLQAs in your downline. So for level 4, if you look at it, if you're not a capper yourself, that's okay. All you need is 5 people in your front line, in your first tier, that has closed one transaction in the last 6 months at about $166,000 deal with a 3% commission. As long as they've had a commission that was a $5,000 gross commission, then they will be counted as an FLQA. So if you've got 5 of those people, then level 4 opens up. If you have 10 people, tier 5 opens up, and so forth. So that is super important in order for you to unlock 4 and 5 and 6 and 7. Here's one of the things that I absolutely love about EXP. And there's another huge company that's one of our competitors that if you don't sell houses yourself, you don't get to collect rev share. And that is really terrible because the whole point is you don't want to be able to have to sell houses for the rest of your life. You want to be able to have passive income and be able to retire. So that is really important. Also, if you retire or stop selling real estate, you can continue earning rev share even after you retire. That is one of the most important things. Plus, your revenue share income is willable. So that's really important. Now, I just want to explain the difference between expansion share and the exponential share. So remember, levels 1, 2, 3 open up right away. Expansion share is commission that you get all the way through the 7. Exponential share means once you get to levels 4 and 5, if you're not a capper or not an icon agent, you have to have a set number of frontline qualifying agents, the FLQA, to open up levels 4 and 5 and to open up levels 6 and 7. Also, something that's really important that people forget about is that in your very first year, they are actually doing something where you have a bonus that you get up to 50% more in bonuses your first year that you join. They really want you to attract agents your first year. And so you get a bonus of up to 50% more in bonuses for your rev share in your first year one, which is really exciting as well. So let me break down the flow of money so you can see how this works. Agents are on an 80-20 commission split and they cap at a $16,000 cap. There is a $149 startup fee and an $85 a month cloud brokerage fee. Now, let's talk about teams. So domestic teams, it's $16,000. They share a cap. If you are a standard team, it's $8,000. In order to be a standard team, you have to have at least 30 transactions to maintain a reduced cap in a year. If you're a mega team, you have to have 120 transactions in a year to be considered a mega team. Then everyone underneath you is only $4,000. Now, let's talk about how you earn rewards. So with equity awards, $200 of EXPI stock for your first transaction. Then you get $400 of stock when an agent caps. And you get $400 of stock when you directly attract another agent. And as soon as that agent closes their first transaction, you also get the $400 of stock for directly attracting that agent. Also, you're welcome to voluntarily enroll to receive 5% of net commissions from closed transactions at a 5% discount. Okay. So, for example, if out of your commission, 5% of your net commission, you can actually buy stock at a 5% discount. So, also, if you are a top agent, you can get back $16,000 in stock when you are an icon agent. So, the easiest way to describe an icon agent is if you cap and then sell another 20 homes. When you do that, that $16,000 that you give, you get $16,000 back in rewards. So what you're really paying, if you subtract out all that stock you're getting, is zero. The newest program that EXP is coming out with is called co-sponsorship. And it really solves some problems with someone when they're joining a brokerage. Some people are like, yes, I want to join EXP, but I have two people that I like, John or Deborah. You love them both. They both are at EXP. They're lovely people, but they both bring different things to the table. So let's say you knew John, he and you go back the last 10 years. You've worked with him at another brokerage. He's just a great guy. But you also have Deborah, and Deborah started giving out websites for all the agents. And it's a really cool program for you to leverage, like all of these new websites that she gives to all the agents underneath them and be able to take their business to the next level. So typically at EXP, you'd have to choose between either John or Deborah. And so you're like, well, gosh, I'm having trouble deciding, but I really want to take my business to the next level. So co-sponsorship allows you to pick both people. So instead of dividing the revenue share between the two and splitting them in half, it's an even better program where both of them get revenue share and both of them get the benefit of having that sponsee join the company. Let's say I have John. He's my buddy. We've been friends forever. And John lives in Virginia now, and I live in Florida. I want to join EXP, but I feel like I can't be as supported with John. So let's say Deborah lives in Tampa. So she would be a better support person because she would be able to be closer to me and all of that. So that's another thing that they're like, I want part of my sponsorship to go to someone who lives near me. And then someone else might bring a different value to the table, like some kind of, websites or some different social media support. So that's another really important thing for someone who wants to do co-sponsorship. In this scenario, you can select John to be your sponsor. And let's say John was the one who really brought you and kind of trained you on this. Let's name the sponsee Bob. Okay. Let's say Bob comes to us and says, I got to choose between John and Deborah. And I'm going to say, why don't we have both? So John becomes the sponsor since he's the one who kind of told you about the program. And then, but you want the things that Deborah brings to the table. Deborah becomes the co-sponsor. So here's the fun part. John gets all the benefits of being the sponsor, which includes the rev share, and he also gets the FLQA. In addition to that, he also gets all the stock grant. Remember, every time you bring someone to the table, you have stock grant because the sponsor always gets the stock grant. In this scenario, the co-sponsor, Deborah, she gets the benefit for having Bob under her in her rev share organization. So Deborah also gets the rev share. But because Bob is on her level 1, she gets to participate in the fast start rev share bonus, which the fast start rev share bonus, they've now added again, another thing. You get an additional 50% for that first year. That will go to Deborah since he's on her level 1. The part that makes it a little bit different and interesting is if Bob adds people below him and adds people to his family tree, then any rev share generated from, like, let's say Steve underneath him, it's going to flow up to John and all the way into John's organization. That's not the case with Deborah. Deborah will get the benefit of rev share and Bob and anyone that's below Bob, but the rev share flows up into that organization. So that way we basically have the same rev share dollars distributed. So Deborah wins, John wins, and from every category, everyone wins. So the only caveat is that Bob can't name Deborah and John with the same family tree, because then you'd be double dipping. So John would be getting paid on the rev share from Deborah and from Bob, and that won't work. And like I said, the 7 people above me made over $3 million in revenue share. So I want to just go over a couple of really good tips for you that I think will be a blessing. So number 1, you want to have extremely specific, bold goals, like goals that just excite you and challenge you, like a minimum of 10x your current income. If you're just like, I want to double next year, I want to get 1.5 times. I realized that all of the times when I made my goals just so small, like 1.5 times and stuff like that, I never ended up growing to where I wanted to go. Number 2 is say no to everything except for what makes money. So you really want to protect your time and energy, and anything that doesn't directly contribute to revenue gets cut. So low value projects, distractions, busy work are out. You have to focus on what moves the needle. Number 3, you have to focus on sales and marketing and then delegate the activities that don't give you that growth. You need to focus on lead generation. You have to focus on client acquisition and marketing, and you have to delegate the rest. And you have to be able to have a team that when you delegate it to, you don't have to constantly micromanage them, because when you give them the ball, they can take the ball and take it down and make a touchdown with it and follow it without you having to explain every move to make. Number 4 is to automate and outsource everything you possibly can. I love teaching people like what systems they can streamline and what things that we've automated that we don't have to worry about doing all those things anymore. Number 5 is getting really skinny on expenses, like cutting unnecessary costs and keeping your business lean. Like the leaner your operations is, the faster your business can scale profitably. So a true story, our accounting person came to us and said, I first came to the team and I'm like, we're going to be growing 10 times as big in the next year, and I'm like casting the vision and putting everything out. And then our accounting girl was like, well, I know that our current accounting software, QuickBooks, is not going to be the system that's going to help us to grow 5 times or 10 times as big as we want to be. But I found one that does cost 5 times of what we're currently paying. And the truth is, we really could have kept that same software. We didn't need that extra cost at that time. And so that was a mistake that we made. Number 6 would be build something that you can scale beyond you. Like everything solely relies on you, then you just don't have a business, you have a prison, and you want to surround yourself with rock stars. And I'm realizing every day, like if you don't have an A player team around you, you can't build a company that grows even when you're not in the room. Elon Musk, he bought Twitter and he fired 80% of the staff and removed tons of unnecessary processes. And the truth is, he only needed 20% of the staff to run efficiently. And most businesses that I've seen, they've got so much fluff. They need to strip it down, get to the essentials, keep the A players, get rid of the other people, and you want to watch your business scale faster than ever. So early in our growth, when we were replicating traditional brokerage models, running revenue share, managing technology, and overseeing massive administrative tasks, it was exhausting. Once we figured out that we had to focus on high leverage pathways and, we started building different platforms that were automated, it really took us to the next level. If what I'm saying to you is resonating with you right now, and you're like, I need the strategy, I need the accountability, I need the clarity, scaling is not luck. You need the right goals to change your mindset. So if what I'm saying to you is really resonating and you want to filter out the distractions, you want to identify the highest leverage activities that you can do, just talk about this and figure out, okay, what is the framework that you can maintain a balance in your faith, in your health, in your family, and start doing what matters most. And we're going to start talking about, okay, how do I get rid of this? How do I get rid of that? And so if you're ready to scale smarter, not harder, ask yourself, are you focusing on high leverage items? Are your systems designed for exponential growth? And are you willing to eliminate distractions and commit to a goal that seems absolutely impossible? If your answer is yes, then guess what? I want you to join one of our masterminds, and it's going to be amazing, and your business and your life will never be the same.